Look, it's been a rough 2 years in the housing market if you've been an investor or a home seller. The fear around interest rates continuing to go up, the economy not doing good with job losses, and talks about a recession just looming over our head, coming at any moment. Well, it looks like that is coming to an end when it comes to the housing market, according to this Business Insider article. So let's break down some key points and I will give you my thoughts on everything. So here we see the article, 3 signs the housing market affordability recession is finally ending. Now, what does that mean exactly? According to this article, the housing market is on a slow climb out of its affordability crisis, though time is still needed to properly relieve consumer pain. And as housing was the first sector to kick off the rolling session because interest rates went up so fast, real estate's obviously a interest rate sensitive environment. We've pointed out more than 2 years. Now it looks like it's participating in the start of rolling recoveries. That comes with an important distinction, though. A recovery is not synonymous with a booming expansion. So basically, light is at the end of the tunnel. We've been saying this before, and as a real estate investor, I can vouch for this. The past 2 years have been tough and awful. They've been filled with some opportunity, but barely. It's just been rough. Buyers are terrified. They don't know when interest rates are going to stop going up. That's always been, the theme of the past few years. When is this pain going to stop? When should I buy a property? And I've been always discussing the socioeconomics of, the changing age group of the millennials. This is the biggest kind of savior that has been propping up the housing market for the past 2 years. And why we didn't have this enormous crash is that the millennial generation, my generation, is fucking gigantic. We're all looking to buy homes at the exact same time. We're all career age. We're comfortable in our jobs now. We're 30, 31, 32, 33, 35 years old, in that range. We're moving up in the companies. We got experience. Now we're becoming the managers. We're getting paid more money, basically. And we want to leave mom's fucking basement, okay? We've been living with mom and dad way too long as a generation historically, and we all want to get out. So while this crash of interest rates, happened and the market took a standstill, eventually the emotions are going to beat out, and they have been. I don't care interest rates are 7%. I understand. They're going to come down later. I keep hearing that. But I got to buy a house now. I'm 28, 29, 30. I got a baby on the way. No, I got to buy a house. And on top of that, with supply being at historic lows, the lowest ever for the amount of people we have, it's just been holding the market up. So in a lot of areas, your key cities, New York City, San Francisco, Chicago, all these major downtowns, the housing market did pull back about 12, 13, 15% for a lot of these major cities across America. However, if you live in the suburbs, the Midwest, Rust Belt, Sun Belt, housing market's only come down about 7, 9, 10%. And it's gonna rebound almost as fast as it went down. So prices haven't really changed that much. And again, homes in those areas, 200 grand, 300 grand, 350 grand on average. So we're talking what? They came down 10 grand, 13 grand, 15 grand. Like, who cares? Who cares? So the housing market in America has held up pretty well. But again, we're going to have a rolling recession in the sense of it's going to take a while to recover, which basically means we're not going to just springboard back up when these cuts happen in September, October, November. Who cares? We're 4-6 months away from rate cuts, across the U.S. We know that it's coming. They can talk tough all they want. The economics aren't looking good. The CPI, the job numbers just now are starting to roll over. We can see that inflation's coming down. They're going to cut soon. When's the exact day in America? I don't know, but they're coming soonish. Everybody knows it. All the buyers are getting ready. They're all salivating, getting ready. So what do you think is going to happen? And again, it goes on to say here, instead, it's more that runaway price and sales trends are easing from extremes while supply side conditions are showing signs of meaningful improvement. So this is corporate talk, a nice way of saying the housing market's going to start picking up, slowly edging back to normality, 3%, 5% appreciation every single year, rather than 10, 20, 30% a year. So in comparison to 2020, it's going to feel like we're super slow, but it's actually not. In comparison to that, yeah, it's going to feel like we're in a crash, but historically, we're just going back to normal. We're just going back to status quo and what's been normal for the past 30 to 40 years. Supply is starting to get better. Builders will come back to the market when interest rates come down. They're going to start building again. Supply will increase. Because right now we ain't got no supply. Because builders haven't been building these past 2 years, 3 years. When interest rates start going up, builders panic. They pull back. They just sit on their vacant land. Shovels stop going in the ground. Why would they? As an investor, I can vouch for this. Why would I build homes or flip homes, which is what I do, or take massive risk in a market that's awful? Like almost the worst real estate market in decades in terms of the amount of sales and getting the price you want. Properties are sitting longer on the market. So why would a builder build more? So now we already had a supply problem. Now builders have stopped for 2 years. They haven't really built anything in a lot of cities across America. Now they're going to start building again, but it's going to take time. When they start later this year, when they get the final confirmation rates are coming down, it's going to take 3, 4, 5, 6 months to get the permit to put a shovel in the ground. Then it's going to take about 12 to 18 months to build said house. So now we're 2 years away from now, basically, before the house is going to be built. So we're going to have this new dip of low supply while interest rates start coming down. It's setting up for a minor version of 2020. See, 2020 had low rates and no supply. Market went insane. Prices went insane. We're going to have some resemblance of that on a smaller level. But basically, the cycle is starting all over again. The real estate cycle comes in waves. Boom, bust, correction. Boom, bust, correction. We're coming out of the correction. The rates will come down. Sentiment will change. Builders will start building again, but it's going to take a while. What do you guys think? Let me know in the comments below. Is this article accurate? Is the worst of real estate pain behind us for the U.S.? What do you guys think? I'll see you in the next video.